Hello and welcome to the Signia market review for the month of May. My name is Elliman and I'm an investment analyst here at Signia. In equity markets, market performance was mixed regionally in the month of May. In the US, the interest rate path of the Federal Reserve continues to weigh on market sentiment as investors price in a higher interest rate environment. Interestingly, Chairman Powell stated that the Fed wouldn't hesitate to raise rates beyond neutral in order to combat extremely elevated inflation. This continues to weigh on equity markets as investors assess the prospects of a recession. Indexes with a growth bias, such as the tech-based Nasdaq, have been particularly targeted as it continues to underperform the broad-based S&P 500 index. And as at the end of May, it currently sits within a bear market as valuation compression continues. Close to home, European and UK markets performed well in the month of May, despite the ongoing conflict in the Ukraine. Notably, the FTSE 100 has outperformed globally this year as a result of the composition of the index benefiting from its exposure to commodity and financial-based entities, which of course do well in a rising price and yield environment. Chinese markets, despite rising in May, have struggled this year as a result of its ongoing trouble with COVID, its reduction in credit growth, and its worsening economic situation. Indeed, Shanghai spent most of May in lockdown, though some reopening has occurred which has aided Chinese markets this month. In fixed income markets, central banks across the globe continue to raise rates in order to combat elevated inflationary pressures. These factors have weighed on debt markets this year. However, with economic activity moderating and the concern of recession, the rise in yields has decelerated. As a result of this, US markets have seen an array of positive returns, although European and Asian markets underperformed in the month of May. In the alternative section, commodity markets produced another positive month as it continues its staggering performance year to date. This has primarily been as a result of supply chain restraints and geopolitical concerns, which both continue to keep prices elevated. Notably, in the currency market, the dollar actually posted its first loss of the year in May. The dollar has accelerated this year on expectation of the Federal Reserve raising rates faster than previously expected. Despite the Fed still conveying a hawkish rhetoric, investors have begun to debate whether the Fed can actually raise rates as high as they want. This is as a result of economic data continuing to moderate and the prospect of recession lingering. That's all for the monthly market review of May. Thank you very much for listening.